All right. Hello, everybody. My name's Karl Krentzel here with Karl Buys Houses. Thank you so much for joining me today. Hello, my name's Karl Krentzel. Not sure when you might have caught that. I'm not sure if we had a little bit of problems. My name again, Karl Krentzel. Thank you for joining me here at Sell More Homes Now for CarlBuysHouses.com. Today, what we're going to talk about is the coronavirus and its effects on the housing market. Now, from the outset, let me just go ahead a couple quick things. First, we need to not panic. Let's just be honest. Okay, we need to not panic. The media's effect on this can get outrageous. I live here in Tucson, Arizona, pretty far away from LA or Seattle or some of the areas where this is happening. And yet even Costco here, I find people are starting to stock up on certain things. And maybe you too have been seeing it on your television or even on your radio or YouTube and other areas where there's been panic buying throughout the United States. Now, I do want to talk with you quickly about this issue. And I don't want to be a doomsday predictor. I want to be somebody who's going to be very level-headed about this, right? From the outset, I want to let you know that a couple things. First, I am a real estate broker here in Tucson, Arizona. I own my own company, Karl Buys Houses. I don't list properties for people. I don't buy properties or represent people to buy properties. So I don't have a dog in this fight, if you will. Nor, as some might claim, is my intention to scare the market, to get you to drop your price so I can buy it at a fraction of its worth. You're not stupid, okay? There's no way you do that. And for anybody to suggest that you would do that is an insult to your intelligence. So let's just be honest. Can we just be honest here as Americans, as citizens, as people who are neighbors? That's what I'd like this communication to be. I'd like this communication to be as neighbors, from one neighbor to another. Now, look, if you were an auto mechanic, I've got a good friend at church, and he's worked on cars, all kinds of cars for 20-something years. And he is super smart when it comes to that. And if I have a problem with my car, I come and I talk to him, hey, what do you think about this? It makes this noise. What does that sound like to you? And he, being an expert, says, well, that sounds like blah, 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 and lets me know what it could potentially be. Now, is it really going to be that? Maybe, maybe not. Until he tears it apart and looks inside, it's hard to say. But because he's an expert, I tend to listen to what he said. Done for 23 years. That's all I've done. Yeah, I've had some side jobs on the side, but as my primary occupation, I've been a real estate broker and an investor and a realtor for over 23 years. Now, in that 23-year period of time, 15 of those years easily, I spent as an REO broker working for banks selling their foreclosed properties. So when it comes to the issue of bank foreclosures and the housing market and how people react to the market, I'd like to think that after selling, and again, I'm not trying to brag, don't get me wrong, but I've sold probably well in the neighborhood of 500 homes or more here in my 20 years or so in Tucson. I'm not trying to brag, but I kind of have a feel for what people think and say when they buy here in Tucson. And I think I'd like to say I'm pretty good at judging what human behavior is going to be in a certain buyer situation. And what I'd like to talk with you about today, neighbor to neighbor, no dog in the fight, not trying to get you to drop the price of your home so I can buy it for pennies on the dollar, but just neighbor to neighbor, trying to give you some solid advice, okay? This is what I'm seeing going on in the housing market. And that's why I went to YouTube directly today with this video, because I wanted to give you some reassurance on the one hand and caution on the other. Because if you're from Tucson, I think it's critically important that you understand the market that we're currently in. Now, not to alarm you, our market in Tucson is fantastic. It's a really good market. We have actually under 2,900 homes that are single-family residences in the Tucson MLS right now, and that is extraordinarily low. The power of this for you as a seller simply means that when there's decreased amount of anything is this basic supply and demand. When you have a decreased amount of anything, well, then if there's a high demand, a low supply, well, then the prices are going to go up. But what we're talking about when we're talking about the coronavirus is a decrease of demand, right? Now, put this into perspective, okay? People buy properties, it's a big decision. And if they're going to make a big decision, they don't make big decisions in a vacuum. Whenever people make a decision, especially a big decision, they start talking to people and looking at other things and thinking about the real estate market and trying to figure out how the stock market plays in things. Now, I spoke with my wife about this. God bless her heart. You know, she's not one of these people. She's just one of these, well, I'll just buy and do whatever. She doesn't really think about these things. And some people are like that. And maybe you are like that. Maybe you're one of those kind of people too. Let's like my wife, that you don't really think about these sorts of things. You just sort of go and act and do. The problem is that people who are around these buyers, realtors like myself back in the day, loved ones, family, friends, they have input as well. So let's pretend you're a home buyer today. Let's say your home's on the market right now. And let's say it's March 1st, or I should say it's March 2nd, I guess. Goodness, okay. This is a very real scenario. And by the way, thank you for watching this video. Shout out to you for watching this. Like and share it if you feel like any of this is going to help any of your friends. I'd like you to take this into real consideration. But this is a real scenario that's going on in Tucson right now, okay? Just imagine this. So on the 29th, the 28th, on Friday, a bunch of people's contracts expired on the MLS. Their listing agreement expired with their agent at the end of the month. And now this is typical. It happens all the time, right? At the end of the month, a bunch of properties go off the market. And then they have to decide, okay, well, should we decide to put it back on the market with another agent, or should we sell it by owner, or should we rent it out? I mean, they got some decisions to make. And that just happened on Friday, okay? Now imagine 1,000 12%, stock market drop. And on Friday, your home goes off the market. Now, you don't think much of it, but over the weekend, you see all the craziness start to develop. Deaths, sicknesses, communicable. I mean, it's unknown, the spread. They're talking about people having not enough test kits, a 2-week incubation period. It's out of control. It's like the swine flu. The thing is, we've not seen the worst yet. And now it's Monday morning and you've got to decide, should I put my home back on the market or should I wait it out? That's the home seller in Tucson right now. If you're a home buyer in Tucson, now you're having that same conversation. Now what's going to happen? Okay, well, the interest rates are certainly going to drop. If the interest rates drop, which they're going to do, okay, watch what's happening in the stock market right now, okay? Just to kind of speed it up a little bit, think about this. The stock market is having a slight rally right now because what they're trying to do is get some of the gains from the losses that were on Friday, and that's understandable. Maybe some of the short-term gains, the shorts and puts, right? But that is underlying the weakness of the market itself. So, for example, Bank of America just came out with something. It says that they cut their market forecast, saying the coronavirus is meaningfully impacting its fundamentals. How does that happen? How does that happen? In 3 weeks' time, a virus that's in China infects 80,000 people, kills 2,800 people or something, and all of a sudden Bank of America's market forecast is cut, saying that their fundamentals are meaningfully impacted. Says that they saw their S&P finishing the year at 31 below earlier estimates. Now, if this starts to affect your stock market, well, then it's undoubtedly going to start to affect the way people's pocketbooks are going to look like in the. So, for example, mortgage rates, it says, this is according to Yahoo Finance, Mortgage rates hitting multi-year lows as investors, fearful of possible coronavirus pandemic, have flocked to safe havens like treasuries, sending the 10-year treasury note to record low yields. So what happens there? When the treasury yield goes low, well, then the interest rates are going to follow. Now, if the interest rates are lower, Lawrence Young from the National Association of Realtors had said, this is what he's saying is going to happen, is that there's going to be people who are going to go ahead and buy based on these lower interest rates. But what difference does it make how low the interest rates are if the overall price is so high that you can't afford it? Or conversely, what about the interest rates going down? Think about this. Okay, home buyer, same scenario. Properties, they're out there on, I don't know, Thursday, Friday of last week, trying to decide which house to buy. And then they go through and the interest rates, let's say last week, 3.5, 3.6. And they're looking at a $300,000 house with a 20% down. And then the interest rates go down a bit to what, 3.4. Well, with 20% down, now instead of being like $1,800 a month, their payment's $1,500 a month, just because of this slight interest rate. And if they wait more, it's going to drop even more. So from a buyer's perspective, you can see how a buyer could feasibly make the argument, you know what, maybe I should wait, see what happens with these interest rates. And meanwhile, what are sellers doing with these interest rates? They see the interest rates coming down too. And they say, well, gosh, I don't want to refi my property and cash out. That's dumb. I don't know what the future holds. Let me just keep my equity, because they remember what happened in 2008. So what do? Cash out refis? Down. They don't do cash out refis. There are hardly any, but there's a bunch of refis going on right now. A bunch. So a lot of these homeowners who were thinking about, their home was on the market on Friday. Maybe I just refinance my house at a lower interest rate, rent the place out, still keep it, go to do what I want to do. And now you're left with a problem. You've got less inventory, but you've got lower interest rates for buyers, but there's no homes for them to buy. And that's the whole problem. Sellers, regardless of where you are, you're going to have to get this intuitively understand this, okay? Regardless of where you are. If you're in Tucson, look at my last post, okay? Go to karlbuyshouses.com. That's Karl, K-A-R-L, buyshouses.com. You'll see in there 10 reasons why the 10 reasons why the housing market is weaker than you think. Okay. Now, I was interviewed by KOL D13 about this, and let me tell you, I've been getting hate mail. I've been getting trolled. I've been getting all kinds of people hating on the fact that I've been saying that this not necessarily the coronavirus, but the housing market is a lot weaker than people are giving credit for. And one of the biggest reasons is because of the low interest rates. The low interest rates are so artificially low that they're propping up this housing market artificially. You keep the interest rates low, homeowners refinance, they keep the property, they keep the cash, they don't invest it because they remember what happened. And then what? People who want to buy a property have a low interest rate, but there's no property. So the properties that are available skyrocket in price, leaving Joe and Jim Schmuckatelli, whatever, who are trying to buy a property, having this low interest rate, but they have to to buy this property is so expensive. And now, boy, I might have a great interest rate to buy it at, but I'm working over here at the tourism place, and boy, my job, I don't know, things aren't looking too good because we had a bunch of cancellations, and look, that's how the market gets affected. And so it doesn't take much. And once what you're starting to see is the foreclosure starts to increase a little bit, and as the foreclosures increase, let me tell you what happened back in the day, right? Back in 2000, oh gosh, what was it? 5, 6, 7, 8. Yeah, 5, 6, 7, 8. The market was kind of just screaming up. And I was working as a bank REO agent. I was foreclosing on properties as they would come up occasionally. I was selling for sale by owners as I would come across them, expired listings. I mean, that was just a regular listing agent. That's what I would do, and I would invest in properties on the side. And so when 2007 and 6, 7, 8, if you're still listening to this, hey, thank you for paying attention to my crazy stories, but I promise I'm going to make this worth your while. Okay. So back then, what you started to see when the foreclosures started to happen, it wasn't the top echelon dude that got foreclosed on first. I mean, I was the guy doing the foreclosures. Okay, so I'm going to know. I saw the way the process works. First is there's a BPO that's done. Whenever a person starts to get behind in their payments, okay, this is how the process works. If you'll bear with me for a minute, I promise I'll make this worth your while. Okay, so you'll understand the process. So if you're behind in your payments, the bank does not want to foreclose on you. That's the last thing they want. It costs them like $55,000 to do it. But what happens then is they send out a BPO, a broker price opinion. They send an agent to come out and do a broker price opinion on your property to kind of get a valuation to see what it's worth. Then they make a decision as to whether or not they should go ahead and start the foreclosure proceedings. Typically they do on or about the 90th day after the foreclosure trustee sale notice goes out. When the foreclosure happens, then they send out, after nobody buys it, then they send out the REO agent, which is me, to go out and check the property. I go out, knock on the door, make contact with the people, and then I would offer them cash for keys to help them move. Give them some time to kind of move out, and that was my job, was to help facilitate that process of time between the foreclosure and then ultimately to the listing and then ultimately the sale of that property. That was my job during that time. And the people that I would knock on the door on at the beginning, it's not the top echelon dude. That's not the guy who's losing his job. Okay? The guy who starts losing his job, this is how you know the economy starts to tip. The people who start getting foreclosed on, it's going to be the middle manager. He's going to be the guy first, right? The guy who gets his job, a guy, gal, whoever, who gets their job and they're kind of new at it. They're a manager. They got this bump in the pay raise. Things going great. Maybe they went out and bought a house. Things are looking great. And then they get the pink slip. That's the first guy who gets it. Second guy who gets it is like the middle line guy, right? Not the lower echelon guy, because he's usually too broke to afford a house. It's usually the guy like the guy in front of him, like the line supervisor. He's the next guy to get it. So the first guy is the manager, the second guy is the line guy, and then you start talking about upper management. That's when you start seeing demographics of houses. That's typically the way I saw it back in the day. And so the reason why this happens is because in companies, when you have a slowdown in a company, whether it be tourism, restaurants, you name it. I mean, the only businesses right now that are really doing very good are people obviously in the mask business. But when you think about it, okay, the people in a downturned market, in a companies that's starting to contract and downsize, they stop hiring. And then it's the last hired, first fired rule, right? And it's the people that they can do without. So it's the middle manager. They get rid of him, and then they take that job, and then they know how it works. They take the middle manager job, and then they don't get rid of the job. They just give it to somebody else. Okay. And so that's where the problem is. In the foreclosure rate, that's how it affects the housing market is affected. So when the coronavirus or anything like this happens, if you see major times where there are quarantines, people afraid to go to other people's houses, then you're going to see where it's going to be very difficult for people to justify going out and buying a house on the whim. I mean, they're just going to kind of wait. And that's what people tend to do, is wait. Now, how does this affect you? Well, if you're a home buyer, I think it's a really good idea to kind of hang on for a minute. I really do, regardless of what happens with this coronavirus issue, because the market, in my opinion, is extraordinarily overheated. Yeah, that's the best way to put it. It's overheated. Now, you can argue with me all you like, and I'm not trying to push one particular political agenda or another, but I do happen to think that this economy is very, very good. Yes, that's true. The fundamentals of the economy, well, we have an awful lot of debt. That's one thing. The other issue, obviously, yeah, I accept the fact that you pay to play. You spend money. You had to break an egg to make an omelet. I get all those metaphors. Okay. But on the other hand, I also accept the fact that when you have so much debt, for example, student debt skyrocketed, credit card debt skyrocketed, personal debt, auto debt, homeowner debt skyrocketed since 2008. All the typical forms of self-control that people would have in the past, gone. We don't really worry about it now. We just kind of finance it, pay for it by credit or whatever. And that's how this works. We lower the interest rates. And that's the pill that everybody's been taking. It's candy. The lower interest rates, it's candy. It makes you wonder, is the Federal Reserve even is it even worth having around? Because all they do is react. They don't act. They just react. This happens, they lower the interest rate. So that's exactly what happens. And then they're going to lower the interest rates again in 2 weeks or less. So if you're a real estate agent, you're a real estate broker out there, and you have a client right now, which many of you do, who say, well, I don't really have to buy right now. I don't have to buy in the next 30 days. I mean, I don't have to close by the end of March. It'd be nice if we closed by the end of April, maybe. Well, then, are you really going to tell your client that right now you must just buy right now? Are you going to tell them that? No. You're going to tell them, look, based on everything I know, the interest rates, they're probably going to go down in another week. And if you're not telling them, the mortgage broker's telling them. If the mortgage broker's not telling them and you're not telling them, well, then you guys have got a problem, in my opinion, because you're not looking out for the right person. You're looking out for yourself. Maybe I'm just being judgmental, but realistically speaking, that's what your job's for. Your job as a real estate agent, as a real estate broker, as a mortgage broker, you're there to kind of look out for these people, and they don't know what's going on. And if you're in there and you're saying, well, gosh, I need to get a sale right away, and you're not telling them about the reality of this market, that the prices are inflated, that the interest rates are high, that who's going to buy your house? That's the biggest question I have for you. And I'm in the business of buying houses. Look, I'm not trying to drone on here and preach to people. Please don't misunderstand me. I'm really trying to be helpful when I tell you this, but I'm in the business of professionally buying houses. I look at properties every single day. And it's not just the crappy houses. I look at the good looking houses too. I believe it or not, I buy houses in all price ranges and in all types and shapes and sizes. And I can tell you, I'm a professional home buyer, and I see what people are offering in the market today. And it's trash. It's trash. A lot of the houses today are trash. If as far as retail market is concerned, now look, if you're trying to sell your property to me and it's a fix-up property, I get it. It's going to be trash. I'm not worried about that. But I mean, for the retail market, okay, for a retail buyer, and if you're a real estate agent out there in the comments, shout out and let me know. But here's the truth. If you're showing property, maybe you're a real estate buyer, maybe you're a buyer, you're out there in the buyer market yourself. Tell me, is the property you're looking at, the properties out there you're looking at, are they really, really great? I mean, are they beautiful? Are they smell great? Do they show great? They look wonderful compared to the prices that they're asking? Am I the only person here in Tucson who seems to think that these prices are out of control? They're just too damn high. Am I the only person who thinks this? Because honest to goodness, when I look at some of the prices of these properties here in Tucson, relative to the condition that they're in, it's shocking. Literally shocking. And it's shocking because people know at this point in time that there's nothing else on the market and there's a ton of people who want to buy. But what happens when that changes? And that's the whole point of the KOLD interview. And that's the whole point of that article that I wrote. That's the whole point of today's video that I'm making. What happens when buyer demand changes? Oh, sure, they're building new houses. They're building new houses here in Tucson, but where are they getting all those construction materials? Go ahead, I'll wait. Want to know where it's coming from? China. I wonder how that supply chain's going right now. And if Tucson's getting their home building supplies from China, well, where is everybody else getting theirs from too? And how's that working right now? Is there going to be any kind of testing on that? Oh, well, they don't have any test kits. Yeah, they don't have any test kits at all. Oh, they're trying to get the test kits. The problem is the test kits are coming soon, but they're just, they're being made in Chinese factories. And they got to get the Chinese factories started up again to make the test kits. Come on, guys, are we serious? I mean, is that really what we're talking about in the real estate market here today? Is what we're just going to assume that this market is going to be a-okay. It's going to be perfectly fine. And there's been what, 80,000 cases of this, 2,900 deaths. It's a little bit. They're saying they're trying to compare it to the swine flu. The problem with comparing it to the swine flu is that the swine flu, had a very slow, a very fast onset. This has a very slow onset. You could be a carrier of this for 2 or 3 weeks and not even feel it, which means essentially that there are vast amounts of people who've been exposed to this disease throughout the United States. And in my estimation, I'm certainly not a epidemiologist by any means, but if it's got a 2-week incubation period and we're just finding out about it now, I'm gonna venture a guess that we're gonna find out a little bit more in 2 weeks what's happening, and then we're really going to know how this is going to affect the housing market. Because when you think about how the housing market in rebuilding and new construction is going to be delayed, well, then that's inevitably going to affect the values. Look, I am not afraid of this. I am excited for this because although any loss of life is tragic, in America, I think we are well suited for this. We are well equipped in the sense that we have the smartest people that can approach this problem. We have the best facilities. We have the smartest minds that are dedicated to researching these sorts of things. We have a government that certainly doesn't mind throwing money at problems. This is not to downplay the deadliness of this disease. However, but this is an important thing, I think, for people to recognize. If you're a home buyer, your positioning right now is in a pretty good place, because this is going to take a couple months to clarify. This is going to take a couple months to clear up. And for the people who need to sell their properties right away, the days of selling a house in 2 weeks, I don't think that's going to be happening on the retail market for much longer. I'm watching the Tucson Multiple Listing Service, and I'll keep you informed. But from my perspective, I don't see that the Tucson Multiple Listing Service is going to be able to keep up this rapid pace of expansion for much longer. I think you're going to see the effects of the coronavirus in the Tucson Multiple Listing Service as far as buying properties. It's going to affect buyer behavior, in my opinion. I see that affecting Tucson buyer behavior in the next 2 weeks, certainly. When you start to see quarantines, when you start to see mass infections, when you start to see people, the death rate start to spiral up a little bit, I think then that's when you're going to start to see people start to be a little bit more panicked. We've not seen the worst of this yet. Now, I'm not trying to panic anybody or anything like that, but the media is extraordinarily efficient at stoking fear. And like it or not, okay, your buyer sees that. If you're a homeowner and you're looking to sell your property, this is a problem you're going to face, like it or not, because the media does spin up the buyer, and they see it on. They don't have to watch television. They can watch the news. They get the Facebook feed. They get the Instagram. They're going to find out what's going on, and then they're going to start thinking about this. And when they start thinking about it, they start delaying. And when they start delaying, that's when you're going to have, in my mind, a problem. Because then you'll have more homes come on the market. As more homes come on the market, then it's going to be more and more homes to choose from. Buyers, as they have more homes to choose from, they're going to have a lower interest rate. And as they have a lower interest rate, more homes to choose from, yeah, you're going to see that it's going to ultimately affect prices at some point. It may not be immediate, but it will be certain. As soon as the sun sets and the sun rises, you can count on the fact that the prices are going to be affected by buyers being concerned. What will affect, if you're a professional, and I know a lot of realtors watch this channel as well. If you've hung on, I really appreciate you watching this. For realtors, your best bet in my mind, you've got to tell your clients honestly what they need to do, right? If you're a buyer, if you don't have to buy right this second, it's not a bad idea to just hang on for a minute or two, because the interest rates are going to come down. They're going to come down again. The inventory will change, yes, of course. But for a buyer, I think that's the best advice. For a seller, I think you got to get realistic about your price. If you don't have to sell right away, well, I accept that. But if you have to sell, if you're going to have to sell at some point here in the next 12 months, now's the time to sell. It really is. You don't want to screw around too much, because this is not going to get any better in the sense right away, right? It will, I think, after about 6 months, maybe. What you're starting to see here is second and third quarter projections starting to get adjusted because of this. And so because of that, I think that's what you need to be aware of. So from a seller's perspective, if you need to sell in the next 6 to 12 months, have your home on the market now, reduce the price to where it needs to, bottom it out to where it needs to be, bottom to where you're going to make what you need to make and to just sleep at night, and then sell your property as quickly as possible and be done with it. Stop wasting time, stop being greedy, waiting on the market to get better. It's not going to be fundamentally better, I think, for another 6 months. So anyway, that's my thoughts. I hope it's helpful. Thank you for watching. I'm always looking forward to your comments in the comments section below. Have a great day. And as always, take care. Take care. Have a powerful day. Bye-bye.